Hello traders, in today's video we take a look at the euro pound. I have a short trade idea. I actually did take part of this trade during the week. I'll be taking you through the price action that is driving my bearish bias. We start off with the monthly time frame just to give you the long-term trend analysis. As you can see, we're in a range. It's clearly defined with the resistance coming in around the 9300 and support coming in around the 8300 region. Scaling it down to the weekly, we actually got my trade signal. We can see there was a clearly defined support area around the 85 region, and you can see price action around this region is showing weaker bounces. So it means the bulls actually facing a lot of resistance from the bears, and what this reaffirms is a bearish order flow. Why? One, you have will-be bears who are on the sidelines watching this market keenly are seeing these lower lows forming into this support area and actually getting in. So you have more sell orders coming to the market. Any buyer who was in this market, say they bought around the 85 region and they are seeing these lower lows to the level, and you're seeing basically weak bullish reactions from this level, they actually closing their positions. And those buyers who are actually in the market who probably sold around these highs actually reinforcing their positions. They're probably adding more, and the net result is a negative bias. So I did take this trade on the daily, and on the daily I entered on the most recently broken low, as you can see, slightly above that low, and my stop loss was above the body high that led to the breakout. I usually turn it to a line chart so I can show you clearly the body high. That's where my stop loss is, and the rationale for my stop loss is basically if price closes above 8500, then my bearish bias is negated. There's no point of remaining bullish, of remaining bearish. On risk management, I usually split my risk into two. For trades that are driven by the higher time frame charts, like this one, as you have seen, driven by the weekly and the daily, I'd risk 2% total position on this short trade, but I'll take it as two trades. Basically, the first trade, I'll look to exit at 1:1, or sometimes I target the 1 ATR. You can put the 1 ATR or the 1:1, depending on what works for you. As you can see, my 1:1 was already hit. So right now, I'm targeting a move towards 8300. 8300, as you have seen from the higher time frame, the monthly, is a very, very key support area. But I know my trade will face resistance from bulls around the 8400. 8400 is actually last month's low. As you can see, formed this weak rejection area. So that's an area probably I'll be monitoring keenly coming this week and the following, for this coming week and the following weeks, because I expect some sort of resistance from bulls around the 8400, but my eventual target is 8300. And as you have seen from the daily, I've already taken my first trade as closed at 1:1. I've already moved my stop to break even, and this trade, I don't know how to call it a free trade, but basically I can't lose. Why? I've already secured my 1:1. I've secured 1%. I've moved my stop to break even, and the reason for moving my stop to break even is usually driven by price action. It has to be supported by price action. As you can see on the H4, we did have this channel, and I was monitoring it for a close under this lower boundary to break. We did see the break, and immediately I saw this break. I actually moved my stop to break even just to, secure a riskless trade, to say so. And for the coming week, I'll actually be looking to pyramid into this trade, depending on how the H4 behaves. If we do see a price break below that, you see, there's a swing point that has been formed following a break of this channel. If we see sustained move below this level, I usually look for rounded retests. I don't like one bar retest. I want to see price to go down, then form a V pattern, retest. Then I'll have my entry around here, a stop just above this high, and look to target 8300. Same trading model. I have two trades in. The first trade I'll target 8300. The other trade I'll target a 1:1. So eventually you can find that from one trade idea, you can actually trade it like 3 or 4 times, depending on the price action patterns actually form on the lower time frame. And eventually, from an initial R of 5%, you might end up even getting more, close to 15 or 20 R from one trade idea. And that, ladies and gentlemen, is how I'll be trading the euro pound come this week. I do expect some pressure from bulls around the 8400, so that's an area I'll be really monitoring. But if we close this swing point, as you can see on the H4, if it closes and it holds, I'll actually take a short following a retest the most recently broken low, which ideally will be around the 84.50 region. The swing point, as you see here, my stop is usually on a chart pattern negation level, which ideally is the last formed high, and I'll be targeting 8300 for the first trade and targeting 8400 for the second. Actually, no, targeting 1:1 for the second trade. So my overall target is 8300, but I'll be closely looking at 8400 just to see how price reacts, and I can actually use it as a trade management level. I can take out a partial, or I can take another short trade just to target 8400. Yeah, so that's how I actually trade, and let's see how it turns out. It can work or it cannot work. That's how price works. But given the price action confirmation that you're seeing, I'm somewhat optimistic that we might at least see a move towards 8400 if you're not going to get to 8300. And that's it. I wish you a fruitful week. May you catch some pips. See you in my next video. Thank you.